Let's just quickly talk about Latent View Analytics. That's a company on our radar. The company announced the acquisition of a 70% stake in Decision Point Analytics for a total consideration of $39.1 million. The company goes on to say that the balance 30% equity stake will be acquired over the next 2 years based on a payout which is on pre-agreed valuation principles. Rajan, Sethuraman, the CEO at Latent View Analytics, is with us on the show. Mr. Sethuraman, afternoon. This is Rima here. First, some financial details about the acquired company, Decision Point Analytics. What has been the historical growth rate and what are the margins of the acquired company? Will this acquisition be EPS accretive from day one for you?
Good afternoon, Rima, and thanks for having me on the show. Decision Point has grown fairly rapidly in the last 3 years since they started focusing on opportunities in the LATAM market, upwards of 50-60%. Of course, this year, they operate on a calendar year principle. This year has been a little slower because of the general market conditions, but otherwise they have been growing at a fairly rapid clip. We have already indicated that they will be EBITDA accretive for us from day one. Their current EBITDA is at the 28 to 30% level. The EPS we'll be able to comment better once we wrap up this quarter and also take into account intangibles and other aspects. So I'll be able to update you when we do our quarterly updates right at the end of Q4.
But is there a risk this acquisition could be EPS dilutive for you?
We're not envisaging at this point in time. Of course, we will get a better handle on it after we compute the intangibles.
You will be paying $39 million upfront to acquire the 70% stake. Once that's done, what will be the cash in the books?
We have upwards of 1,000 crores at this point in time, and this one is going to use up about 350 crores. So we will have a significant amount of cash available. So there is no issue related to liquidity at this point in time. In fact, as we start integrating and getting synergy benefits out of this, we are also in parallel looking at other opportunities that are aligned with our strategy, right, in terms of what we intend to do in specific verticals as well as horizontal capabilities.
All right. Hi, Mr. Rajan. Good afternoon and good to see you, Ben. So this acquisition will help your CPG business. I think it is around 8 to 9% of your revenues. How do you see this shaping up? Where does it head to?
That's correct. So we see this as having a fairly significant impact on our CPG business. In CPG in particular, there are three types of problem statements and opportunities that we are going after. One of them is related to the entire R&D and innovation space, where our smart innovation value proposition plays out. The second is supply chain, specifically related to demand forecasting, on-shelf availability. Our connected view value proposition plays in that area. And the third is RGM, which is revenue growth management. And with this acquisition, we will have the RGM capability as part of our repertoire. So that is what we intend to take very aggressively into the market over the next few years. We're expecting that the CPG business could actually contribute close to 20% of our revenues, right, over a 3-year time frame. Of course, we have to make sure that we are leveraging all of the synergy benefits in terms of the capability and the go-to-market coming together. But that's the trajectory that we're shooting for.
So 20% should be the CPG contribution over the next 3 years, bolstered by this acquisition.
Yeah.
Okay. What about the synergies on the margin front? Anyway, the acquired company has margins above Latent View's margins. The acquired company has margins of 28-30%. I think you are operating at slightly lower margins. Your aspiration is to get to 25%. With the fact that the acquired company has higher margins, plus there will be synergy benefits, what could be the margin trajectory of Latent View once you consolidate this acquisition?
Yeah, sure. If you remember, we were operating between 25 to 28%. Historically, it's only in the last 12-18 months where we have significantly doubled down on investments, both related to capabilities as well as go-to-market, that we decided that we can take a bit of a hit on the margins. Over the last few quarters, our margins have been inching up as well, though slowly and not as fast as we would have wanted it to. I think this acquisition will provide further impetus in that direction. So we are expecting that they should help us get back to the earlier trajectory, right, over a 3-4 quarters period of time. So when we end this year, the next fiscal year, we should be close enough to the original trajectory that we had.
That's 25% plus?
That's correct.
Okay, so by the end of FY25, you're hopeful that margins for Latent will come to 25%. Also, this acquired company is very strong in Latin America. What is your presence in Latin America?
So we are currently not present in LATAM at all. So in fact, it opens up a couple of opportunities for us. One is the LATAM market itself. There are several multinationals which are either headquartered or they have a significant presence in LATAM, right? Just in terms of the business opportunity in LATAM. I think we'll be able to take a lot of the solutions and value props that we have, even in other industries, right into that market. The other part is that LATAM is a really good nearshore location for getting a lot of work done. As the consulting nature of the work steps up, there will be an expectation that we are able to operate in similar time zones or close enough. And that's where the LATAM market can actually play to our advantage. So we are expecting that we'll be able to capitalize on both the fronts with this acquisition.
Okay, one final question. You will still be left with cash of 650 crore even after you make this payout. Are you planning to do more acquisitions in FY25 itself?
So we don't have a particular timeline like that in mind. We are always continuously looking out for new opportunities. Earlier this year, we actually set up a formal corporate development team, and we have 2 people, and they have been significantly instrumental in actually getting this particular opportunity right to a closure. We are continuously looking for new opportunities. At this point in time, there are again half a dozen that we are evaluating. Obviously, whether we move forward and how quickly move forward will depend on what capability we are able to get and the synergy benefits, right, that we can identify with that opportunity.
All right. So thank you very much for joining in and giving us a lot of the details on this new acquisition. The street is definitely liking it. Stock is up almost 11% right now. Good luck with those plans going forward. By the way, it's 22,500 on the index. What a move we've had in the market.